These stable, blue-chip companies have all raised their dividend payout recently. JP Morgan Chase. The bank recently raised its dividend payout by 5%. British Petroleum. The oil major hiked its dividend by 10% as oil prices begin to climb higher. Starbucks. Following a strong second quarter print, the coffee chain raised its dividend payment by 7.5%. Let's dive in. Here are the 3 top dividend stocks to buy in fourth quarter 2023. Welcome to Timely Investment Research. Dividend payments are important to investors, especially with stock prices softening in the face of high interest rates. Many shareholders depend on the cash they get from dividend stocks for both income and just general portfolio buoyancy amid ongoing uncertainty. Above-average dividends communicate that companies are committed to returning excess cash to shareholders. Many dividend-hunting investors also seek companies that have a record of consistently increasing their dividend payouts. Companies that cut their dividends, such as Paramount Global and Icahn Enterprises, often see their stocks tank as a result. So if you're looking for dividend stocks that are signaling health and future payouts, look to companies that have raised their dividend payments in recent months. With that in mind, here are 3 top dividend stocks to buy in fourth quarter 2023. Number 1. JP Morgan Chase. JP Morgan Chase recently raised its quarterly dividend by 5% to $1.05 per share. JP Morgan, the largest lender in the world with $3 trillion of assets under management, said the new dividend is payable on October 31st to shareholders of record at the close of business on October 6. The dividend increase was announced after the bank successfully completed the U.S. Federal Reserve's latest stress test, ensuring that it is well capitalized and able to withstand any financial pressures that arise in the market. Executives at JP Morgan have said that they intend to continue prioritizing the bank's dividend payment and continue raising it going forward. JP Morgan now pays a quarterly dividend that yields nearly 3%. Additionally, JP Morgan stock looks affordable right now, trading at just 9 times future earnings, which is well below the average price-to-earnings ratio in the S&P 500. Bank stocks are down right now, but can be expected to rise once interest rates peak. JP Morgan stock has gained 7.5% so far in 2023. Number 2. British Petroleum. With crude oil prices back above $90 a barrel, now is a good time to consider energy stocks. And British Petroleum is a solid choice. In August, British Petroleum hiked its quarterly dividend payment by 10% even as the oil major reported a 70% year-over-year decline in its second quarter profit. Despite the earnings downturn, British Petroleum announced that it's raising its quarterly dividend payout to 44 cents a share, giving it a yield of nearly 5%. The oil major also said that it plans to repurchase $1.5 billion of its own stock in third quarter. While the first half of this year was difficult due to slumping oil prices, British Petroleum is coming off an exceptionally strong year in 2022 when it reported a record annual profit of $27.7 billion as the price of crude oil peaked at $122 a barrel. Looking ahead, British Petroleum's profits and free cash flow should improve now that crude prices are once again rising. This could lead to further dividend increases and stock buybacks. British Petroleum stock is up 9.5% year-to-date. Number 3. Starbucks. Another blue-chip name that recently hiked its quarterly dividend is retail coffee chain Starbucks. The Seattle-based company, known for its lattes and cappuccinos, lifted its payout to shareholders by 7.5%, following a strong earnings print for second quarter. Starbucks said that, going forward, it will pay stockholders 57 cents a share, up from 53 cents previously. The latest dividend increase marks the 13th consecutive year that Starbucks has raised its payout. Starbucks' new dividend is payable on November 24th of this year to shareholders of record on November 10th. The dividend increase comes after the company reported better-than-expected second quarter results and announced that its operating margin during second quarter expanded to 17.3% from 15.9% a year ago, driven by improvements in productivity and higher menu prices. The dividend boost also comes amid a management change. Howard Schultz, who ran Starbucks multiple times over the last 40 years, recently retired. Laxman Narasimhan is Starbucks' new CEO. Starbucks stock is down 11% on the year. The company's dividend now yields 2.55%. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, Hit that bell icon to never miss an upload, and hey, don't forget to subscribe.